Welcome to Managing Profitable Growth, Session 1. The focus of this session is on how to measure and manage marketing profitability, marketing return on sales, and marketing return on investment. This session is divided into 3 parts, a short summary and individual next steps to get you started in measuring and managing these important marketing performance metrics. Net marketing contribution is the most fundamental marketing profitability metric and is a financial metric that fits within the domain of financial reporting. Net marketing contribution is simply sales times percent margin minus marketing and sales expenses. For example, sales of $10 billion with a 35% margin produces a gross profit of $3.5 billion. After deducting $1 billion in marketing and sales expenses, the net marketing contribution is $2.5 billion. This is the marketing profit the company attained as a result of the company's marketing strategies and investment in marketing and sales expenses. Marketing ROS, our second marketing profitability metric, is simply the net marketing contribution as a percent of sales. This allows us to control for large variances in sales and to compare the marketing profits of a company with business units, regions, markets, or product lines, and even individual products. Marketing ROI, our third marketing profitability metric, is simply the net marketing contribution divided by the investment in marketing and sales expenses utilized to produce that level of marketing profit. Like marketing ROS, we can compare a company or business to any region, market, or product in terms of marketing ROI. Many of you will not know your exact marketing and sales expenses. Companies often do not report this as a separate expense. If you do not know your marketing and sales expenses, we recommend using 75% of SG&A as a way to get started. This estimate can be revised later. Before we go any further, let's look at a company application of these marketing profitability metrics. Apple is a great example. For the last 10 years, their net marketing contribution has been tracked closely with their operating income. In 2009, their net marketing contribution of $10 billion helped produce a net profit of $5.7 billion and earnings per share of $6.29. While this measure of net marketing contribution was generated at the company level, every Apple product had a net marketing contribution that contributed to the $10 billion in overall net marketing contribution and can be measured individually. The Marketing Metrics Handbook provides a software platform that allows you to analyze your own marketing strategies and marketing profitability. Metric 1.1 allows you to evaluate many different changes in performance and the corresponding impact on net marketing contribution. Metric 1.2 allows you to assess marketing ROS and marketing ROI, as well as net marketing contribution. This allows you to evaluate how performance changes modify these two marketing profitability metrics. In Part 2, we'll examine how marketing profitability can be managed. Sales are a key driver in the marketing profitability equation and can be broken down into 4 marketing forces. When this expression of sales is multiplied by the percent margin, we achieve the same level of gross profit. Next, subtracting marketing and sales expenses from the gross profit, we obtain the same net marketing contribution presented in the previous section. Metric 1.4 in the Marketing Metrics Handbook provides a market-level model of marketing profitability, which is useful for managing net marketing contribution for a market or region with many different products. Metric 1.5 provides a product-level model of marketing profitability. This allows managers to include price and unit costs in managing the net marketing contribution for a product line or product. For Metrics 1.4 and 1.5, the marketing expenses and sales expenses are input separately to allow for the analysis of different marketing strategies. For example, sales expenses would be considerably different for direct sales or indirect channel sales. In Part 3, we'll show you how to use Marketing ROS and Marketing ROI to create a strategic view of marketing profitability. A marketing profitability portfolio can be created using Marketing ROS and Marketing ROI. This particular marketing profitability portfolio is for a medical devices business with 10 major product lines. If they had $1 to invest in marketing and sales expenses, they would be best served by investing in product number 10, where they would earn $4.50 in marketing profits for each dollar invested. Product 1 would only return 50 cents on each dollar invested. Metric 1.3 in the Marketing Metrics Handbook can be used for this purpose. Metric 1.6 allows you to benchmark your company against 1 to 4 other companies. In this figure, we can see that Apple's high level of marketing ROI helps build a stronger pre-tax return on assets. We can further validate the importance of marketing ROI by comparing this relationship using 100 of the Fortune 500 business-to-consumer companies. Companies with a higher marketing ROI tend to produce a higher pre-tax ROA. This is also true for other industry sectors, such as business-to-business, high-tech, energy and materials, and services. Let's review what we've covered in Session 1. These are the 3 marketing profitability metrics presented in Session 1. Net marketing contribution is the marketing profit the company attained as a result of the company's marketing strategies and investment in marketing and sales expenses. Marketing ROS is simply the net marketing contribution as a percent of sales. And finally, marketing ROI is simply the net marketing contribution divided by the investment in marketing and sales expenses. Our first application was to break down net marketing contribution into a managerial model of marketing forces that shape net marketing contribution. We created 2 handbook metric models, one at the market level and one at the product level. Our second application focused on creating a marketing profitability portfolio and benchmarking company marketing ROI. The marketing profitability portfolio allows for a strategic view of comparative performance among businesses, regions, or product lines within a business. The company benchmark provides a good strategic view on how a company is performing when compared to other benchmark companies. Let's close with a reminder that our focus for each session is to learn, measure, and manage marketing performance metrics that have a known relationship with profitability.